In this video, we are going to talk about what are multi-bagger stocks, so before starting this video, please like this video and subscribe to our channel for future updates. Stocks that give returns that are a few times their expenses are called multi-baggers. These are basically stocks that are underestimated and have solid essentials, accordingly introducing themselves as extraordinary speculation choices. Multi-bagger stock organizations are solid in corporate administration and have organizations that are adaptable inside a limited capacity to focus time. The term multi-bagger was authored first by Peter Lynch in quite a while book One Up on Wall Street, alluding to stocks that return many times over the first speculation, for example over 100%. Multi-bagger stocks depict stock thoughts that continue to give exceptional yields in a generally brief time frame. One can believe these stocks to be the unicorns of the securities exchange, thoughts that give over 100% returns on their ongoing worth in a brief time frame. Here's a description of the what are multi-bagger stocks. Let's start. Understanding multi-bagger stocks. Multi-bagger stocks are not a particular classification of stocks, but rather portray the idea of the stocks that can possibly raise assets for the organization and develop dramatically, in this manner giving more noteworthy returns each time. These stocks are not singled out the premise of the idea of the organization or its valuation. These stocks are frequently underestimated and fill in high development enterprises and developing business sectors, similar to India. They consume a large chunk of the day to show results, however as they start, the stocks become multi-bagger protections. There are many elements that figure out what stocks might become multi-baggers and what don't, and frequently these stocks are the most standard ones either, however that can be possible. The PE proportion, cost-to-book proportion, and different boundaries are demonstrative of the stock's true capacity, in light of which financial backers can decide to put resources into such stock, while likewise expecting the connected gamble. Low estimated stocks don't develop into multi-baggers by the same token. A few fundamental foci to remember while figuring on multi-bagger stocks is to take a gander at their PE proportion, their presentation over the past quarters, the obligation to value proportion, and income products. Picking a stock, underestimated or at its ongoing cost, and perusing why the stock is exchanging at that cost can yield new discoveries about the stock's essentials. Highlights of multi-bagger stocks. The biggest virtue of a multi-bagger investor is their patience due to the sheer amount of time these stocks take to show value. Companies with strong competitive advantages in the growing market can boost the growth of their stocks. While if the price grows 10 times, it would be called a 10-bagger. Thus, multi-baggers are stocks whose prices have risen multiple times their initial investment values. How to identify multi-bagger stocks? The debt level of the company should be within reasonable limits. There are no defined levels per se for debt, as it will vary from industry to industry. However, as a ballpark measure, debt should not be more than 30% of the equity value. Check on previous quarter performance. Keep a check on the company's revenue multiples on a quarter-on-quarter basis. If the multiples are low, but the company is performing at the operational level, then that can be a hint that the company has significant upside potential. Sources of earnings. Along with the revenue numbers, check the sources from which the company is making money. Is the primary revenue segment set to grow at the macro level? Are the operations of the company easily scalable? If yes, then the stock may have the potential to be a multi-bagger. Earnings and price multiples. Calculate the trailing 12-month EPS and revenue to arrive at the current PE and price sales ratios. If the PE level is growing faster than the stock price, then its chances of being a multi-bagger are bright. Check out the business model CAPEX structural management changes. Be on the lookout for any major changes in the quarterly results annual reports that could have a significant impact on the company's operations. Every investor wishes to own multi-baggers in his or her portfolio, but it is not an easy task to find such stocks. Primarily, there are three factors one needs to look at when scouting for these gems. The presence of all three is imperative if you are looking to identify long-term wealth creators in your portfolio. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.